What's up, everybody? Welcome to another episode of the Stock Bros Podcast. My name is Tony. Today, we're going to talk about one of the most popular internet stocks in the past year. This is AMC Entertainment. Founded in 1920, they are a well-known movie theater business that operates all around the globe. But before we get started, please remember to subscribe, leave a like, leave a comment, let me know your thoughts. And also check out my links in the video description below to get started with investing through Acorns. If you're confused and you don't know where to start, Acorns is a perfect app to help you out. Also have a link for public so you can buy stocks with fractional shares. And I also have a course teaching you the ABCs of investing and the terminology you need to know before you start investing. So you can check all that out in the links below. So let's get started. Now, many of you know this stock because of the movement that's been happening via Reddit, Twitter, Facebook, and all across social media. And what's happening is hedge funds and institutional investors are shorting or betting that stock prices will fall for companies like AMC, GameStop. And when the prices fall, they make hundreds of millions or even billions of dollars. So there's been an effort via social media to get people to band together and buy shares of these companies in order to make the prices go up. And what happens is, as the prices go up, these hedge funds and institutional investors, they lose more and more money the higher the stock price gets. Now, this worked really well with GameStop and caught the hedge funds off guard. But make no mistake about it now, these hedge funds have learned, and now they're counting on people to do this. This means that they will just adjust their strategies and they will use it to their advantage. So they're not going to lose out. Now, let's get into the fundamentals and the financials of AMC. There's a misconception out there that AMC is debt-free. This couldn't be further from the truth, and I thought they were as well based on the news stories that have been coming out. But let's talk about what happened. So pre-COVID, they owed about $4.8 billion in debt. As of the first quarter of this year, they're at $6 billion in debt. So that's an increase of $1.2 billion in debt. So AMC managed to stay alive by issuing over 300 million new shares and raising $900 million from outside investors. Now, back in January when they did this, they raised $900 million. And what this means is they were able to get through the rest of this year without having to declare Chapter 11 or Chapter 12 bankruptcy. And so it seems as though they should be able to at least survive until the pandemic is over, which is a good thing. But they're not debt-free. They took on financing, and they actually have more debt now. AMC, their management, they issued hundreds of millions of shares and debt, which helps AMC stock price stay alive, but at the cost of heavy dilution to the shareholders. So an example of the shares being diluted, or an example of share dilution, is if you owned 10% of the company in 2019 and you didn't buy any more shares up until today, your shares would now be diluted to 2% of the company because they increased their share price by over 300 million new shares. Now, you could make some money on swing trades with AMC. It is possible, but here's why I won't be investing in AMC stock. So in the first quarter of this year, AMC lost $570 million just in the first 3 months of this year. Now, analysts believe that AMC will lose $1.5 billion in all of 2021. And they don't expect this company to be able to return to profitability until 2024. So that's at least 3 years from now before they'll actually be profitable and be out of the red. And based on what I see from their balance sheets, I would tend to agree with that assessment as well, because in the last 5 quarters, they're doing nothing but hemorrhaging cash, and they're needing to take on loans. They're needing to sell more of their shares and issue more shares. So it's a very slippery slope. And I like investing in companies that are profitable and don't have massive amounts of debt. Unfortunately, due to the pandemic, AMC is not in a viable place, or is not a viable long-term investment. I'll definitely go back to the movies once in a while, once everything is open again and once we're past the pandemic. And it's absolutely horrible that COVID destroyed AMC. And I really do hope that they pull through, because I do enjoy going to the movie theaters. It's a fun experience to go with some friends. And when you're younger, you go with your girlfriend and whatnot. But unfortunately, we also have to be realistic and realize that this isn't a viable long-term investment, in my opinion, based on all of the financial balance sheets and the earnings reports that I'm reading, and many articles that I'm reading on Benzinga and Market Watch and a lot of really reputable sites. This is a very risky investment, and you have to realize, if you're putting your money in this long term, you have to realize that you're investing in a company that doesn't make money and may not make actual profits for the next 3 years. But with that being said, it doesn't mean that it's necessarily a bad short-term investment. I could potentially see AMC going back up to maybe $20, $25 a share, but it's going to take a while to get there. I just don't see a lot of upside with this. That's the thing. I'd rather just keep dollar cost averaging into my ETFs and keep maintaining my investment strategy. I'm not saying that it's stupid to invest in AMC by any means. I'm just saying that while AMC may make for a fun meme, and there's just nothing fun about losing money, and AMC stock seems to be in a highly negative position, even if earnings do recover, because they've added $1.2 billion in debt from the pandemic. So as a short-term play, it might not be a bad idea, but you have to know when to get out. When you have profits, if one day it skyrockets 5% in a day and you have a nice little profit, you have to realize that sometimes it's better to not be greedy and just take your profits. Because I see this stock as being volatile because people are playing around with it. People are using it for short squeezes and short selling, and it's becoming GameStop-esque, but I don't think it's ever going to get to the share price that GameStop has excelled to. That's just crazy. I really personally couldn't see this going past $20, $25. I could be wrong. You never know. The investing has been crazy lately, as we've seen in the last year, where things are incredibly overvalued for no real reason. There's a lot of new investors coming in the market that don't really understand evaluations. And there are people that are purposely pumping this up to hurt the institutions. But I'm telling you right now, if you're one of those people that are buying this stock just to get it back at an institution or a hedge fund, that is the wrong way to go about it, because you're only going to hurt yourself. These companies make billions of dollars and hundreds of millions of dollars. You're not going to affect them. You're really not going to affect them, as we saw with the hedge fund that lost a lot of money through GameStop. They were able to just get more funding and cover all their losses, and it really didn't even matter that much to them. They fully recovered. So just be smart about it. I'm not giving financial advice on whether or not to invest it or not, whether to invest it or not to invest in it. I'm just personally not going to be investing in it. Now, let me know what you think of this video. Hopefully this helps you better understand the position that AMC is in, and let me know your thoughts. Hopefully that clears up some information, helps you understand what you're investing in. So invest at your own risk. I just think there's so many better companies to be putting your hard-earned money into, rather than something that has been losing money for over a year and a half now and is probably going to continue to lose money for the next 2 to 3 years. So thanks for watching. Please subscribe. Remember to use my links below. Check out my course as well. And until next time, thanks for watching and thanks for listening.